Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Wednesday, February 26th, 2025. This is Nelson John. Let's get started. Axis Bank is exploring a potential sale of its NBFC arm, Axis Finance, in response to the Reserve Bank of India's proposed norm on business overlaps and holding limits. Initially considering an IPO, the bank has shifted gears towards a private sale, expecting higher valuations. Investment bank Morgan Stanley has been brought in to find a buyer, with Axis Bank looking at a valuation of around $1 billion. It may sell 80 to 100% of its stake if an attractive offer comes in. The move aligns with RBI's draft regulations, which requires banks to cut subsidiary stakes below 20% and eliminate lending overlaps within banking groups. Axis Finance, a mid-tier NBFC with a growing loan book, has drawn interest from private equity firms keen to tap into India's expanding financial sector. The subsidiary recorded 3,013.9 crore rupees in revenue for April-December 2024, up from 2,255 crore rupees a year earlier, with a net profit of 494 crore rupees. While merging Axis Finance with Axis Bank was considered, regulatory and operational challenges make it less viable. For now, Axis Bank is banking on a full sale to comply with regulations while maximizing value. As US President Donald Trump threatens reciprocal tariff on Indian exports from engineering goods to textiles, electronic shipments may be the least affected. The reason? A smaller tariff disparity between the two countries. Currently, Indian electronic exports to the US face an average tariff of 0.4%, while US electronics imports into India are taxed at 7.64%. That 7.23% gap is far lower than the 13% seen in diamonds and gold or 32% in processed food. Given Apple's major role in India's electronic exports, any tariff hike could also impact American businesses. India's electronics exports to the US have surged from $986 million in FY18 to $10 billion in FY24, accounting for 35% of the industry's total exports. The US, which imports $700 billion in electronics annually, is a key market for India's goal of hitting $500 billion in exports by 2030. However, India's high tariffs, once used to protect domestic industries, now exceeds those in China, Vietnam, and Mexico. A retaliatory move by the US could dent India's competitiveness and disrupt supply chains. Experts argue that Trump's tariffs plan would violate the WTO's most favored nation (MFN) rule, which mandates equal tariffs for all partners unless an FTA exists. India remains hopeful, citing the US's economic benefits from Indian exports. To ease trade tensions, India has lowered duties on some US imports, including Ethernet switches and synthetic flavoring. Meanwhile, Commerce Minister Piyush Goyal has urged the industry to aim for $100 billion in exports within the next 5 to 7 years, reinforcing India's push to become a global electronics hub. Nvidia's rocky start to 2025 hasn't dented investor confidence. After a $600 billion wipeout in January due to competition concerns from China's DeepSeek, the stock has rebounded, down just 3% this year and 8.7% from its January peak. Retail investors remain bullish, pouring $5.7 billion into Nvidia shares so far this year, more than double last year's pace. On Interactive Brokers, Nvidia is among the top 2 traded stocks with over 554,000 net buy orders placed through mid-February. Option traders are also betting big ahead of Nvidia's earnings, wagering on a 9% post-earnings swing, consistent with past trends. The company is expected to report a 59% rise in earnings and a 72% revenue jump. For many, Nvidia represents the future of AI. Global private equity giants KKR and Partners Group are set to lead a $120 to $150 million fundraising round in HR tech startup Darwinbox, valuing the company at around $950 million. The deal, a mix of primary and secondary funding, comes as PE firms chase profitable tech startups. KKR is investing $50 million, while Partners Group will contribute $55 million. Early backers like Peak 15, Lightspeed Ventures, Startup Exceed, and India Partners are expected to partially or fully exit in this round. This move is seen as a strategic realignment of Darwinbox's capitalization table ahead of a potential IPO later this year. Avendus Capital is advising on the fundraise. Darwinbox, which was founded in 2015, provides HR solutions across recruitment, payroll, attendance, and analytics, serving clients like Big Basket, Pine Labs, and IIFL Finance. The company's revenue jumped 58% to 392 crore rupees in FY24, and it is on track to turn profitable by the year end. India's HR tech market, valued at $1.13 billion in 2024, is projected to double by 2033, reports Sneha Shah and Ranjini Raghavan. With global HR tech startups like Rippling secure multi-billion-dollar valuations, investor interest in the sector remains strong. Meanwhile, KKR Partners Group continue to expand their India footprint, signaling a broader PE push into digital-first businesses. Parents in Bangalore are feeling the heat as private school fees continues to soar, rising 10 to 15% annually, with some schools increasing them by a staggering 30%. Many families now find it impossible to keep up, as the cost of tuition, textbook, transport, and uniforms climb up every year. For instance, one parent revealed that her child's fees have jumped from 42,000 rupees to nearly 68,000 rupees per year in just 2 years. Another parent stressed on how additional school expenses are pushing budgets to the brink. The Voice of Parents, the association, has slammed schools for these hikes, questioning how they can justify such steep increases when salaries rise by just 2 to 3% annually. Many are also frustrated by the demand for early fee payments and the lack of transparency in school pricing. Defending the hikes, school officials cite rising operational costs, including teacher salaries. Meanwhile, Karnataka's Education Minister Madhu Bangarappa admits that the government has limited control but urges schools to be reasonable and suggests parents to consider government schools. With frustration mounting, parents are demanding tighter regulations to keep quality education within reach before it turns into a luxury only a few can afford. That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest news. Until then, this is Nelson John signing off. Have a wonderful Wednesday.